tell us about what's like the history of sports investing. So like, what I see or, what I've perceived over the last, whatever 100 years, is a lot of like, family operated sports franchises for the most part. Kind of what's like the history of sports investing? Kind of take us through that.
It's still that way. So, what's interesting? You hit it spot on because it's a bunch of families, and they're good families. They're good people that do it. But it's a select few people who can own in the sports franchises. And to your point, everybody thinks of sports franchises. They don't think of everything else that's connected to the sports asset class. So, people think the teams, they think the leagues. The fun fact is the teams and leagues do not print money. The valuations continue to go up, but what makes money is the media and broadcasting, the ticketing, the food and bev, the sport tech, these CPG products, the devices that are alongside it that actually make the sports happen. And so we don't even really, so we do look at some of the teams, but we look at it as a foot in the door in a minority position to get us the rest of the stream. So for instance, we're looking at a European soccer team right now. And although that's great, we're looking at the team. We want to see improvements in the team. We're looking at the real estate, the stadium. Can we put a digital wallet in there? Can we connect it to American products? And so we're looking at all those pieces. So if you follow a digital footprint of the dollar and see where that goes in the propensity of the market, that's where we invest our dollars. And so that's kind of where you look at the history of sports investing. Nobody has been on that side of it because all of those pieces have traditionally been privately held, right? So the public side of it, and recently, you have some big name firms that are investing in minority stakes in the teams. What they're doing is they're going hunting, looking at the top teams and say, hey, we want to provide some liquidity. We want to have you take some chips off the table. And they're offering to buy those out at the high valuations. Well, then you need an exit event to make money on those versus we're going to go after the privately held pieces. And then from there, we can actually take those, provide liquidity for the founders and watch those suckers scale on the net asset value. So it's a stock appreciation play. And so what that means is we can play with where sports have been for against the markets. And so sports in general has outperformed the markets for the last 60 years. And in the last 20, you've seen it more so on the team side. But just as a stable asset class, it's recession proof, it's resilient because generally, we've seen it with COVID, we saw it in 2008. Sure, the markets and everything could be tanking, but people are still going to fill the stands. Or in COVID, when you couldn't be in stands, memorabilia sales are through the roof. So it continues to be one of these asset classes that unites everybody and people still pour cash into year over year.